Okay, g'day everyone. So good morning, good evening, good afternoon, wherever you are. I was going to say sound check, but it sounds like I'm coming through. But quick sound check. Thanks, folks. So g'day, Desolator, Trader Travel, Kevin, Logsy, Golby, Retop, Gregs, Hugh, Pitzman, Maddie, Matt. Thank you. All right, folks. JDP, Richard. Let's jump in, Erebus. Let's jump in, folks. So thought we would do a little bit of a g'day Gert, Wazine, T-Bonus, Yo-Yo, Filippo. Thought we would do something a little different this time. What we will do though, Rena, low trading bluefin. What I will get you to do though is just hold off the questions until the end if you can. Just allow me to focus and just to deliver it as best as I can without getting distracted. But what I thought we would do is a candlestick lesson or a candlestick case study. So the candlestick pattern that we're going to look at is one of my favourites. Favourite because it works. Now, it is one of the secondary candlesticks, but it is only that because it doesn't appear as often as it should, or when I say it should, as often as some of the major candlestick patterns. So the candlestick pattern that we're going to look at is called a three-method pattern. Now, bit of an unusual name. G'day Tony, no FOMO, DJ. Bit of an unusual name, VJ, but I think you'll see why in a moment. Now, there's different variations of the pattern. Now, what I will do though is add a bit of a caveat here whereby I'm going to say the pattern is only as good as the trader that can trade it, and the trader that can trade these properly knows that the candlestick pattern is just one piece of the puzzle. So there's quite a few other things that go with it. So we'll certainly look at the pattern and the variations of the patterns. But what we're also going to look at is the context in which it appears. Because price action, which is the candlestick, price action is king, but context is queen. So the pattern we're going to look at is called the three-method pattern. So let's read through this together. So it says a major candlestick continuation pattern is called the three-method signal, and can be classified as a rising three, which is bullish, or a falling three pattern, which is bearish. Both signal small interruptions but do not signal a reversal. Taking the concepts of supply and demand into consideration, the three methods pattern are predicated by uncertainty in the market. G'day John D, Daddy Pat. However, the market corrects itself when the bulls see that a new low can't be made, or when the bears see that a new high cannot be made. In either situation, the trend continues. The bulls become bullish again and the bears become bearish again. The three methods are related to support and resistance lines which can be penetrated, and the rising three method signal and the falling three method signals. Let me read that again. The rising three method signal and the falling three methods signals are ways of confirming that the attempted penetration will fail and that the trend will continue. So recognizing continuation patterns is important whether you're in a long or short position. Besides adding to positions, it also confirms that your other indicators, it also confirms your other indicators. Even if you are trading on the short side, the three methods can help you use the continuation pattern to do much more. So the falling three method. So the falling three method pattern begins with a long black candle followed by a series of upward reaction candles. So here's our long black, and here is our upward reaction candles in this instance. Now, the middle candle is grey here, so you can see it doesn't matter whether it's green or whether it's red. So in this instance, we've got a white candle which is green, and in the middle can be either. We've got a green candle the other side of it. Now, some of you will also know from some of the work that we do in some of the lessons we do in the streams, that this candle here also can be known as a dominant candle, or what I call a wide range bar, WRB. So we can have a positive wide range bar or a negative wide range bar. So these come with their own particular, characteristics as well, which I won't go into now. So the falling three method pattern begins with a long black candle followed by a series of upward reaction candles. These candles all form within the range of the original candle. So here's the range of the original candle. These candles here are still within the range, but have smaller bodies. Normally the smaller candles would be white, since the large trend candle is black. This will be about 45 minutes, Robert. G'day Gideon. G'day Firesword. 5 minutes. Normally the smaller candles will be white, since the large trend candle is black, so green. The fifth and final candle is the same as the original trend candle, so this one here, but it closes at a new low. So this is important here. Closes at a new low and opens lower than the close of the previous day. So see the criteria here? So this is the ideal textbook version. So we've got prices pushing up, closes here, opens slightly lower, and closes a new low. Doesn't just make a new low, closes a new low. So in fact, what we've done is penetrated the low of the dominant candle. Okay? The only difference is that so the fifth and final candle is the same as the original trend candle, but it closes at a new low and opens lower than the close of the previous day. All right? So these two are fairly similar. Now just remember, this is the textbook version. The only difference is that the candle will be higher or lower depending on the trend of the original candle. All right? So we're talking about falling three or rising three. The falling three method is basically the opposite as the rising three method. The market has been in a downtrend, so we're talking about both here. Market's been in a downtrend. Okay, this is duplicated. Okay, the optimal number of uptrending days should be 3. Again, 2 or 4 or 5 counter trend days can be observed. So we see some that have got 2, and I see often some that have got 5, and these are the examples. So what we will do is look at the theory first, and then we'll look at some examples, and especially the context in which they appear. So the falling three method pattern continued. The important factors are that they do not close above the open of the big black candle, and that the shadows do not go above the black candle's open, this one here. Okay, so we've got the leading candle, the dominant candle, or the wide range bar. So this is important. Right, so everything needs to be contained within this. The final day of the formation should open down in the body, which it's doing here, of the last uptrend day, and close lower than the black. We've read that. So what is the criteria for this pattern? So the criteria is a downtrend is in progress, a long black candle forms. A group of small body candles follow, preferably white body. The close of any uptrend day does not close higher than the open of the big black candle. See here? So we can have a wick that goes above, but we need the close to be contained within this first candle. The final day opens into the body of the last one, so here, and proceeds to close below the close of the first big black candle day. So closes below the low of the pattern. So this is the ideal one. So this is the ideal or the textbook version. So what's the psychology behind this pattern? G'day, Nasruddin. So the falling 3 method pattern is considered a rest in the downtrend. Just like the rising 3 method pattern, the appearance of the white candle unnerves the bears. But they see the bulls are unable to take prices higher. The bears gain their confidence back and resume the selling. The concept is that the first white candle day brings some doubt into the bear camp. The next day does the same. By the third day, the bears are now convinced that the bulls do not have the strength to push prices up anymore. Right? So, because these candles here cannot even break and close into the high of the first one, above the high of the first dominant candle, the bears are not so worried now. So you've got to think of, if you're short here, what would you see as this is rising up? So always try and think of the psychology behind the patterns. Don't just think of a pattern. This is made up of buyers and sellers making decisions. So put yourself into the position of the person that's short this setup. So this is in regards to the bears, but they see the bulls are unable to take prices higher. The bears gain their confidence back and resume the selling. So see that it can't break the high here, resume the selling. The concept is that the first white candle day brings some doubt. Okay, sorry, this is... All right, that's doubled up. All right, so the rising 3 method, which is the same, but in reverse. So the rising 3 method pattern is an easy pattern to see during uptrends. A long white candle forms. So this is the opposite. This is the bullish version. So here's our long white candle. Here's our dominant candle, our wide range bar. Now notice we've got here during uptrends. We'll go into this in a little later. So a long white candle forms, is then followed by a series of small candles, each consecutive getting lower. The optimal number of the pullback days is 3. We saw that before. The important factor, though, is that they do not close below the open of the big white candle. So you can see this one here can't close below this point here. So we've got to push and basically just a retracement into the dominant candle. So if we broke this down on a smaller time frame, price is pushing up, and then we've just got to push back like this. So this here could be our whole white candle. Think of it as that as well, if you can. If that makes it any easier. So it is also preferred that the shadows do not go below the white candle. So in other words, the preference is that the shadow here doesn't go below the white candle. So this is an absolute textbook version with everything in place. And you'll see in a moment why textbook is one thing, but in reality, and you'll see from the examples, variations of it still do not change the psychology behind the pattern, okay? It does lessen it to a little degree. So we might have let's say a 100% 3 method pattern. Well, I generally take 70%. So if we tick off, if each of these criteria represents 25%, we just score it off as we go. That's how I do it. So the final day of the formation should open in the candle of the last candle. Yes, John D, shall I pull back? Yeah, questions after, Tony. So DJ, you're talking about favourites here, but can we assume that this pattern is valid on any time frame? Yes, DJ, absolutely. I'll show you this. I'll show you this in a moment. Because it's pure price action, folks. It'll occur, and it's fractal in nature. It'll occur on monthly, weekly, daily, everything down to 15-second charts. The psychology is exactly the same. So then we want the last candle to close higher than the first one, but I like it to close higher than the structure. Okay, so the criteria once again, an uptrend is in progress. All right, now the uptrend could be just starting, very short term. A group of small long white candle forms, so this one. A group of small body candle follows, preferably black ones. Middle one though can be black or white or green or red. The close of any pullback day does not close lower than the big white dominant wide range bar. The final day opens into the body and closes above the close of the big white candle. So pattern psychology in terms of the bullish setup. So the rising 3 method pattern, so we've got the falling and the rising 3 method, is considered a rest in the trend, or in Japanese terms, a rest from battle. So we've got the big massive push up here, and you all hear me talk about big massive push. We need to correct this before price goes on. So a rest from battle. The concept is that the first black candle day brings some doubt into the bull camp. The next day does the same. By the third day, so this is the third one here, the bulls are now convinced that the bears do not have the strength to push prices down anymore. So we're still contained in this. And those of you that know from the discussions, this big dominant candle has its own support and resistance. The bulls get their courage back and start stepping in. The pattern resembles the Western bull flag or pennant formation. Okay, I don't quite see that. However, the concept was originally developed in the 1700s. In modern terms, which is what I prefer, the market was just taking a breather. They're talking about here being the flag. Okay? So yes, you can have it such that the centre looks like this. So that's what they're talking about in terms of the flag. All right, so let's have a look at some examples. And let's even go back, and if we can, we'll have a look at some of these, how they're formed. So we've had the textbook version. Let's have a look at real life. So real life here is CAD Swiss 4 hour. So any time frame. Now, here's the pattern here. So there's been an uptrend in place. We've got the first bar right here. We've got the pullback in here. The wick actually does penetrate through this bar, but it can't close below this one. Now, then we've got the big push, which closes above the close of the first candle. Can we see that? See it here? Now, what often happens, and those of you will know, these big pushes quite often require, especially if this is pushed hard, the pullback in between. So there's two entries here. Because we've got our dominant candle into the pattern, we've got a wide range bar as well. You can take a pullback entry, or you can take a break above the high. And this is from personal experience, because we've already set up the condition here. Now, one thing that I will also say right here that I haven't mentioned is volume. So, like any good pattern, I want to see large volume on the first and the fifth day. Because that shows me that there's been plenty of participation. Then, inside, I want to see 3 bars with lower volume. Just like any good pullback, I want to see increasing volume, decreasing volume. So this in itself is, we broke this up, pull back inside, and then a push out the other side. So this is the volume signature that I want to see surrounding this pattern. Now, the only thing with this one that I don't like, and I'm going to highlight it, is I don't like this pattern when it is too far up the trend. So to me, where this is appearing, it's just a little too extended. I would prefer it here and even down here. When you look at this setup here, let's ignore the wick on this one. Here it is here, in the ideal location. This pattern I've found best as an igniting pattern, where it ignites the move. So it may be that price is pulled down here, and this is the structure at the low. Okay, very good. Trader Travel said CAD Swiss didn't go much further. I think we spoke about this. This is a few days old. But let's have a look at the volume. Big green. So the first day, consecutive days in here. The last day with the hammer. So does this volume signature fit the bill for what we just spoke about? Aye. So ignore this one and ignore these 3. Ideal. The only thing, remember we said before, the context. I don't like the context. Here's the good old 20 period, nothing magical about it. It's just one of the indicators I do use. Just as a visual aid. You can see here also, it's slightly extended. Right. And what I don't like is 2, we've got our big third, and we've got slowing momentum here. You see this here? And if you're a divergence fan, right across the top. So for me, a big no. This one. Okay, even though everything ticks the box, with a position of it, no good. and trade to travel just confirmed that this one didn't push on. I don't know what it did. So there's one example. Let's have a look at the next one. All right, CAD Singapore. Oh. So let's have a look at the context. Nice big push. V reversal, or our Yo V as we call it. Nice basing structure. Here's our pattern here. So 1, 2, 3, 4. This is a 4 candle pattern, this one. Let's have a look at the volume. So there's the first one. Okay, very good. Yo-Yo says it dropped 70 pips from that candle. There we go. And there's the last candle. So, look where the setup is. Does the volume fit the bill? Candle 1, candle 4. Does the volume fit the bill? So Logsy says yes, Yo-Yo says yes. No FOMO says just. John D's given me a thumbs up. So yes, it does fit the bill. Would have been nice to have a little bit more volume on this one, but that's okay. It still fits the bill. Tony said no. All right, now, what you need to also remember, and it's not part of this lesson, but volume is also relative. So look at the nice big push here. Nice big push on medium volume. Now, this is a daily chart. So what does that tell us? Nice big push. Look at the range of this bar. With maybe below average volume. When you look at all the volume across here. Well, let's take the average. It's probably around here somewhere. So this one is average or slightly below, but look at the size of it. What does this tell us? Yo-Yo says accumulation. John says no sellers. All right. So it tells us a lack of sellers, an ease of movement. Now, those of you that know the ABCs that we are so fond of, have a look where it's appearing. Our last candle here. It's closing above the high of the whole setup. All the candles here are contained within this one. What do you think of that one? So, here's the 20 period. Look at this. Beautiful. So, all we need now is a few days in here to give us our atom handle, if he's listening, or our cup with handle. That's it. Right? So look at the context of this. Look at what's driving it. Beautiful. So would I take the break above here straight away? Probably not. I'd want to see something in here, or if it did, I'd want to see a pull. I'd want to wait for a pullback. That's all right, Michael. So let's have a quick look at that one. How are we going for time? No, probably no good. What was it? CAD Singapore. We will look at this one. Absolutely. Now this is not pre cherry picked, folks, either. Right? Yeah, absolutely. Yeah, says one for the playbook. Right? Absolutely, right. Check it out. Here's our setup here. Right? Now I haven't seen a lot of these, so I don't know. So see it here. Right? Now here's this candle here has given us the pullback into this. So this is not bad. So would I have been more inclined to take this? Yes. Maybe not a full position here. I would have liked to see another day. We didn't get it. All right. So here's the setup. Here's the result. All right. So drill down to your lower time frame to get your stop in here. G'day, Mosim. So CAD Singapore. All right, let's move on, folks. Let's have a look at another one. So who likes this pattern already? Yeah, buy, stop, retop with that one, both. All right, so here's another one. Now I'm going to reference some Aussie stocks, okay, because I'm an Aussie stock trader, maybe some US stocks. But you have to remember price action is price action, okay? Doesn't matter what time frame. Sorry, doesn't matter whether it's what instrument, what asset class, what time. Not convinced, says Tony. We'll have to have a word about that. Right? So it's price action. So here's one, CSL. So we've got a big base structure. Nice big push. Break above the base. Right? So here is the pattern, but in a little bit more of an extended area. We do, however, have a nice trending price action. So here's the pattern here. Here's the start. So we've got the breakout. Do you think this could be a breakout pullback that I talk about, a form of it? Absolutely. So in this instance here, we've got a whole heap of candles inside, whole heap of reds. Now we can all see the green inside and we can see the green outside. So if we broke this down a bit, you can see in here, we've just got a swing inside and a break here. So this still fits maybe 60%. The only thing I don't like about this is the close of this one. Right? So this is sitting on, yes, absolutely, this is sitting on the high of the base. See it here? There's a little base inside, sitting on the high of the base. So this is our accumulation after the breakout. So even though it doesn't fit the bill, because of maybe slightly extended, this last candle is lacking a bit of participation. The fact of where it is, I like this. We're holding this breakout bar as well. See this here? Price is broken. Tried to pull back in. We got our fake out here because it was too stretched into it. Pulled back, and then we've got the hold here. Right? So from that point of view, I like this. So it may only get a B because of the setup and the volume, but because of where it is, I might give it a B plus. All right. So there we go. This is not a cup with handle. So there's another one. All right. Here's another one. This is today. Came up in the scans today. 38-cent stock. Downtrend. Uptrend starting. Volume. Pause. Push. Move down to the low of the consolidation, previous consolidation. Gap down that gets bought straight up. And look at the volume. Was it news? Was it announcement? I don't care. The fact is, it's telling me it gapped down, it closed back into the high. We've got our structure inside, and look at today's candle. Yes, it is. It's not bad, actually. John, if you need to see it, it's CVN. Carnarvon. All right. So, got the push, got the bluefin Wickfield, got it on hold. I'm watching for something in here to get in. CVN. All right. So there's another one. See where it's appeared as an igniting setup. Beautiful. I had a crack at this one in here. I got this move there. It could be, Richard. Could be a Head and Shoulders. Got no swing here yet. We need a lower low from this candle. All right. Look at the volume. So does this one tick all the boxes? Absolutely. Right. See what some of these do? They just continue. So there's that one. All right. Pound Swiss. 4 hour. So is it 1 or is it 2? Where is it? One or 2? Where's the pattern? John D says both. Retop Bet says both. Logsy says 2. Richard says, was it sunny today in Melbourne? Yes. Tony says 2. Trader Tell says both. All right. So remember we spoke about the textbook variations? So it's both. All right. This one's a little bit more, just a little bit more funky. All right. So 1's pretty good, isn't it? Let's have a look at 1. See if I can get my crosshairs going. Hang on, folks. All right, got it. Beautiful. All right, so I've got crosshairs on a picture. Hope you can see that. So let's line up the volume. First one, right here. The middle ones. See these middle ones? See the middle one here? Can be either. So we've got 3 middle ones. Look at this. Look at the outside one. This one here. So these are the 2 outsides. You see that? Yeah, you can. Oh, I've still got the thing on. Right, so volume. Now well, I've got the crosshairs on, Tony. First candle. 3 middle ones. Last one. Yes, it does, Logsy. See that? Right. So, let's have a look at the structure. Okay, in this instance, we've got a small one here, but we can probably take these 2. So look at the inside. Even though this is a small candle here, see they don't close inside. Right? See the last one here, still doesn't break the low. Yeah, the crosshairs. Right? Now look at this one. We've got a gap, slight gap into it. We've got a shakeout as well. And we've got a beautiful close. Look at the context. Where's the 20 period? Absolutely beautiful. So the next bar, we've got the pullback into this candle. See it here? The importance of waiting for the break. It's pretty good. All right, so here's the other one. Okay, I just mentioned that, Stig. So you take the break above the pattern, see here? But if this is too high, this one here, you want to see price pull into it first and then break the high. But just be careful where it is as well. So let's have a look at this one. Here's the lead-in candle. 3 candles inside. Big, nice big candle here. Look at the context. All right, look where this is appearing. See the context? See the pullback inside it? Let's have a look at the volume signal. So this is an enhanced one because of this push here. My only concern with this one would be the pullback inside it. So the first candle, right here. Inside candles, there. Last candle, here. So what's is the volume correct? Is the volume signature right? Yeah, it is. Right? So it gets a plus, gets a tick. So both of these setups, to me, especially the first one is an A. Second one, probably a B plus. Maybe a tad stretched, but where it is nice. Breakout, pullback. Maybe a tad extended here, but everything else, these are pretty good. All right, let's move on. Same thing, obviously. No, sorry. Here we go. This was round about the same time. Yeah, it was. So pound Swiss, British pound. So now we're spotting them. Here's one. Here's the second one. Support and resistance. The context. Beautiful pullback. Right, so we've got our structure like this. One of my favourites. Got a nice big push up here. Under the 20 though, but here, closing above. Pretty good. Can't break the anchor. Pull back into the pattern. Volume. Ideal. Candle 1, candle 5. Inside. Beautiful. So let's have a look at the volume on the other one. Here. So inside. Volume on both gets a big tick. Second one here. Push. Pull back. And the push here. Pull back into the candle. My only concern here. Res. This one here would have been valid. If you drop down a smaller time frame, you probably would have seen it. See the pullback into it there? Because what this is doing, this bar here, smaller time frame, will look like this. And this in here, the next bar, this one here, will look something like this. The break. Or it could have been open here, push, and it could have just sat here. We don't know. We can't see inside this one. That's 4 hour, that one. All right, let's move on. Okay, British pound, 1 hour. Let's have a look at the context. Pull back, thrust, pull back, push. So we're starting to generate an uptrend. So what do we got? Is it here, number 1? Is it here, number 2? Or is it somewhere else? Is it here, 3? Okay. Could it be here? Low trading's got it. All right. Yeah, probably not. But remember this here. This was probably the 4-hour one. Remember? That was probably the setup on the 4-hour. See that? Now, here it is here. Yes, this is a kind of one here, but not really. It's kind of a C grade. All right? So it's this one here. So let's have a look at the context. Push. Shallow pullback. Break above the high, that's too strong. So we've got our failed break, then we've got our push and a close. Got to pull back into it, break above the pattern. So context gets an A. All right. Look at the 20 period. Through it comes back and tags it. Now I've shown you examples that haven't yet moved. So I haven't cherry picked these, folks. Now you're right here too. This here is probably the other one. See this? So we're looking at the lower time frame now on this one. Let's have a look at the volume. First candle. Here. 1, 2, 3 inside. Here, here, here. Fourth candle. So volume gets a tick. Right. So this one here, maybe a little stretched, but still, to me, this is an A grade. So this is one that's formed on the other side of the 4-hour pattern. Right. All right, let's zip through the others quickly, folks. All right. Here it is here. Not bad. Above the resistance, volume supportive. Last candle, very low. However, look at the push. All right. So, it's a bit extended. B. For me. All right, look at this one. Uptrend, pull back, push up. Here it is here. Context. Let's have a look at the volume. First candle. Bit low. Second candle. Okay, it's a bit higher, that's okay. Middle candles. Not much. Last candle. Nice big movement. Reasonable volume. Right? So, look at the previous volume. See here? There's participation here. Look at the sell volume. It's not excessive. Sell volume here, not excessive. So I like this one. Maybe a tad, what are we, $2.80. Yeah, maybe a 15 cent. Probably a 6% stop. Too big for me. I'd want to see maybe a couple in here. But still, it's not bad. So this gets a B plus. All right, what about this one? So you want to know this? It's NXT. No. 0. Pullback. Push. Base. Downtrend line. High of the structure. Here's our setup in here. Right at the trend line. All right. So what do you think of this one? Context is pretty good. So this is igniting, trying to ignite out of this structure. Volume is good. Volume on this bar is good, especially above the structure. So I took this, break above this structure, pulled back, and I took it and I added in here. If you want to look at the stock, it's 0, XRO. Right. So yeah, setup wasn't bad. It's a B, only because of where it is, right at the trend line. Could have easily popped here and then failed. But I like the base. All right, here we go again. So have a look at the context. Nice uptrend, weak pullback. I think this is 10 period. Push up. Multiple candles. Push up. Looks like a higher close. So we've created the ABC with a higher C. Let's have a look at the volume signature. First candle, middle candles. Exit candle. Beautiful. Gets a tick. Yeah, rising. What is it? Rising 3, 5. Rising 7. See the difference here? None of these got below the wide range bar. See it here? That's right, bounce off that's a 10 SMA. Oh, it could be a 20. Yeah, it probably is. Probably a 20. The 10 will be running up here. All right. So, nice area. Straight off. Look at the volume that came in after. Yeah, you know this one, Tony. You know I like this one. All right. So great example. Context though, all important. All right, here's another one. What do we think about this one? Oh yeah, this is not bad. Look at the high volume in this candle, doing nothing. Right? This whole setup in itself, sorry, I should have zoomed in, shouldn't I? This is good. And then we've got the pause in here. Take the break? Absolutely. Yeah, volume is not ideal, but volume is still the same. Volume is supportive. Higher in, higher out. It's low, but hasn't quite got participation. There has here. Look, very next day. And look at what price has done. Look at the next candle. Do you think this is being held up with all this volume? Absolutely. High volume and it hardly moved. Do you think it's being supported here? All right, now weekly, daily. How are we going for time? No good. So, here's the weekly chart. Here's the daily chart. No, I haven't that one. I think it's recent. Let's have a look at this one. Big exhaustive move through the low. Pullback. High volume. There's a weekly chart. Daily chart. Push. Here's our setup in here. See it here? Let's have a look. Candle in. Candle inside. Outside candle. No, not really. Volume's not really supportive. However, same as the previous example, look at this bar here. Something's going on. A doji. Look at a high volume doji. Look at the next week. Holding. Do you reckon a break above the high would be worth taking? See you, Logsy. Good on you, bud. Glad you enjoyed it. So where's our channel? So that's the weekly. Let's break it down onto the daily. So this bar here is this one here. See why I don't take the break when price is stretched? Right. So let's have a look at the volume. See your retop. All right. So big push up here. No volume. That's okay. Lack of supply. Little bar here. Very next bar. Don't forget, this here is probably the doji. See this here? Yeah, it is. These here are the doji. Pull back. Right? So what does this look like here? Could this be a variant here? Could that be a variant? Let's have a look at the volume. Volume in. Inside volume. Volume out. Not bad. Yeah, this here, you're right. Close below the low. Probably stocks, Richard. So yeah, a little bit not quite good. Now, my other concern with this, I think this one may move. And if you want to have a look, folks, this is not a recommendation. Those in Australia, it's SM1. Came up in tonight's scans. Right? This is not a recommendation to buy or sell. Watch it. So my only concern with this is break below the weekly anchor, volume. See this? This looks almost corrective. See this here? Right. Some of you saw this morning I traded intraday a stock and it ended up beautiful, did exactly what I said. Right? Today, big climactic, base, break above the base I entered, pulled back and then it took off. Beautiful. I like to trade FX when our market's no good. So what I do is I go in and out of instruments and asset classes. All right, just quickly, here we go. Here's this one again. Here's another one. No, this might be zero, but anyway. See here, right at the trend line, volume signature's great. One of my beautiful scan triggers right here. All right. Major shock here, closes low, gaps open, right at the trend line, superb. I think this might be zero. Yeah, it's a $43 stock. Sorry if I led you astray. Right. Sorry, I can't get the next one. Don't think that's it. Oh yeah, we did that one. Yeah, we've done them all, folks. We did them all. So there we go. What do you think, everyone? Quick questions, folks. 2 questions. I enjoyed that, everyone. Quick question. So when the stock markets are no good and they're not conducive pulling back, I'll go harder into Forex. Thanks, Kevin. Saturday coffee morning in about 3 weeks, Kevin, if you're interested. Thank you, John. See you, VJ. All right? Context is all important, folks. There you go, trade to travel. It's your new friend, isn't it? We need to name it after you. You're welcome, the Stig. We need to name this one after trade to travel. He or she seems to like that one. If you're in Melbourne, send me a message. I have a coffee morning every sort of 6 or 8 weeks. You're welcome, Filippo. Pitzman, you're welcome. There we go. Rusty 3. You're welcome, no FOMO. DJ. Bluefin. JDP. Excellent. Yes. The Russell 3. How about that? All right. Very good. Very good, folks. Yeah, Rusty's rising through or Rusty's falling through. All right. Very good, folks. All right. Well, thank you, everyone, for your company. I enjoy that too. I always learn. It reinforces what I know as well. So I can never get enough of this as well. So I enjoyed it, and I hope you did too. But I hope more so that something that you can add to your arsenal. All right. Another tool in your tool belt. All right. It's just a pattern. It's a little tiny pattern. Can be used for entry, but just remember, context with these is everything. So there we go. So Matt, how is it you get the vibe of price action? Just thousands of hours of looking at charts. Very good. Okay, everyone, take care, and I'll see some of you tomorrow for Asia session review. Don't forget to, the replay will be in the Academy in due time under Workshops Module A. So bookmark it and maybe watch it again. All right, folks, take care, trade safe, bye for now.